Well, hello everybody. This is L.A. Little. I'm back with the follow-up video to the introductory to the model video that you've probably seen by now. And if you haven't, I would suggest that you watch that one before you watch this. And even though we'll have a little bit of that review here, that one goes a lot more into detail about what the model is, what are the main components of that model, how do they work together, and how that model is put together here on Neoclassical TA.com. So this particular video is going to go beyond that. Now, this video is going to give you a little bit of a review. It's going to look more at the critical question of how do I use this site and the neoclassical model that embodies. How do I use that to get practical, actionable ideas that I can pursue for profits? So as a backdrop to get to answering that critical question, the NeoTA site that you have here, it's www.neo-ta.com, is dedicated to providing you with both analysis, information, as well as tools that allow you, that's the Neo tools here, to implement the concepts of the model. And what I'm going to do in this video is take you through how to do that using the Swiss market and the NeoTA site, and then delve into a little bit more detail of how I go about doing that on this site as well. When I'm picking stocks for either myself or portfolio for others. So I want to focus on those ideas here and give you a good feel for how that goes. NeoTA provides a complete technical analysis of the Swiss stock sectors and general market. So all of that's captured in here. If we go up to the tools, I have some watch lists, some are shared, some are not, that basically capture all of the sectors, the general market, and the individual stocks in that market. And so if I click on the watch list, and the watch list is one of the tools. Now the watch list is kind of a glue that holds the rest of the tools together. And the watch list is a convenient way for you to manage what you do in an efficient manner. One of the main constraints we all have is how much time that we have to devote to whatever it is that we do. And if you're trying to profit from the markets, you need to be efficient about how you find ideas, how you track ideas, and how you trade those things. And this tools are tools that I built for myself a long time ago and have codified those, made those into web services to make them easy for you and others to do the same thing. So in this particular case, I have the general market. I've labeled a watch list. I created it here. I labeled it, and then I put some stocks into it. Actually, in this case, I put sectors into it. And so if I wanted to look at this particular index, if I just click on that index, what's going to happen is it's going to pop up the 3 different time frames for that instrument that I clicked on, along with the trading cube. Now, if you watch the first video, you know that we look at all time frames the same. In other words, we're able to apply the same concepts no matter what the time frame. And what that means is that on any given time frame, and in this case it's a daily time frame, we do that with the use of 60 bars across the chart, whether it's on a weekly time frame, a daily time frame, or if we go to the monthly time frame, you're going to see 60 bars here, no matter what the time frame. As part of the pop-up, what you also get is a trading cube. And that trading cube gives you the trend of that stock. And let me blow this up a little bit bigger. It gives you the trend of that stock. It also gives you the trend of the in this case, the trend of the stock is the index, right? And it gives you what would be the sector if it was a stock and what would be the index if it was a stock. So you'd have the stock, the sector, the index. And because this is the same thing across all of them, you simply get the one. It also gives you what the trend is, which you see here, blue and red. and it enables you to see that on each of those time frames. So if I were to look up here, for example, on this monthly chart and look to see what the trend is on this monthly chart, the last time the trend transitioned was way back here. That's why you see it red. It was a suspect bullish trend transition. What it got over was off the left-hand side of the chart. You don't see it anymore. And this number that you see down here is the MTTF, which is how long that trend has been in effect. That's a valuable thing. We did talk about it in the first video, and we'll circle back to it when we're doing more discussion on how to actually use this service and use the model to make wise decisions about what you do and don't want to trade. But you get all three of them, you see all the time frames, and you're able to make rational assessments about the general market based on this. For example, when I look at this particular market at this particular time, and I see that it is a bullish market, and I see that because I see reaffirmations of bullish trends. Back here we had bullish trends as well. We never have broken on the way up. So on this time frame, 3 months essentially, 60 bars is going to be about 3 months. Back from the early December, this trend has simply been to the top side. So we know it's bullish. We also know from what we've talked about before is that anytime you break a swing point high and you get over it, which is what we did here, and we got over this one as well, that area where it breaks over it, which in this case is that little area right there, once it comes back to try and test into that area, and if you note here, this had already consolidated for a period of time. Once it came back in to test that area and it was unable to break down below that support zone, which is also the green that you see here, that led to a move to the top side. And as we talked about in the first video, there's a lot of probabilities that we have associated with all of these characteristics. The most important thing to realize when you're thinking about trading something that you're seeing and using the model is that there's really just two types of trades. If you boil it down, all trades end up being one of two types. One type of trade is when a price breaks out, you buy the breakout. That's one type, right? So you're buying a breakout. Another is allowing it to come back to where it broke out, retrace back in, and buy the retrace. Everything else is a derivative of those two. Once we say that those are the only two types of trades, then we can look into the various factors having to do with time, having to do with price, and having to do with volume, and how all stocks, indexes, and sectors behave with those things. So in other words, once we break out, what's the probability that it's going to come back? What is that probability that the price is going to come back to where it broke out? If it does come back, how fast? Time. Is it going to come back fast? Is it going to come back slow? And when it gets there, what kind of volume does it exhibit when it tests back into the area that it broke out from? All of those things together contribute to you being able to tell most likely what the market's going to do, assigning probabilities to what those, what that scenario is, assigning your probability to it, and then based on that probability, based on the projection expectations, and based on the risk, right? So we have probability and we have risk. And once we know what those two things are, we can make a decision about whether we want to buy something or not. Is there enough gain in this, and is the probability high enough for me to take on that risk? In a nutshell, that's what you're doing, and that's how the model is typically used. So you have this ability to make a rational assessment, a systematic identification of investment opportunities with that high reward to risk as well as high probability that gives you an edge that you wouldn't have if you weren't using this model. The model also, by the very nature of the way it's structured and what I just went over, if you're looking at it on multiple time frames, you can actually get an even more of an edge than most of your peers in terms of stock selection and in terms of your risk management. And I'll go into that a little bit more as we get farther into this video. So in video 2, we showed you how to implement the concepts based on the Swiss website, a site that's fully dedicated to professional Swiss money managers. And in this video, this first technical service that's fully dedicated to the Swiss equity managers, NeoTA, we're going to show you how to use it to actually pick stocks and to pick a portfolio. So in summary, it's a unique technical analysis platform and is directed towards Swiss equity managers. It's a proprietary non-classical, right? It's not the old classical stuff that everybody talks about. It's based on supply and demand as you see it on the charts, and it really is centered around these two principles, right? It's about trend, right? It's all about which direction is the market going. Is it going up? Is it going sideways? Is it going down? And then within those trends, using the concepts in the model, right? The neoclassical model, it's about where to get on to the train and where to get off that train. It's timing. And the timing is based on what the market tells you. So it's a complete technical analysis of the Swiss sectors, the stocks, the general market, and it algorithmically measures supply and demand as you see it and visualizes it on the chart with these support and resistance zones. And that's what you see with these green areas on the chart. And in fact, it highlights those areas that are more strong, shall we say. I was just highlighting this area for you a while ago. If you pull it back and look at it, you can see how the shade is stronger. That's because it's an overlap. And it's an overlapping area, gives it more strength. And the suspicion is that if price comes back to this area again, you're going to have a good chance that it's going to be a buy one more time in that area. And again, that's the sort of thing we're going to talk about as we go through the practical application of this model. It allows a reliable daily rational assessment of the market, and it's going to improve your overall performance, and in particular, you're going to have less drawdowns. One of the most difficult things that a money manager can do is to see the great run-up in their portfolio only to see it come all the way back. And this model is all about cutting that off and not giving this back. And it does it through supply and demand, as you see it on the charts. So let's move on and get into how this model works and how I use it and how you can use it. Trend and timing are the main focus of the model. One way to look at trend is through the trading cube here. The trading cube was a concept that I originated. I don't believe it ever existed anywhere, not that I'm aware of. And it essentially gives you the short, intermediate, and long-term time frames across a stock, a sector, and a index. And it tells you what the trend is. If it's sideways, it's bullish, it's bearish. And it also gives you a number underneath it, which is the mean time to failure, MTTF. And MTTF, if you have any engineering background or even familiar with the term, is mean time to failure. Every trend has a point where it no longer continues. In other words, it starts out, and it does that through a trend transition when it breaks a swing point. It becomes bullish, for example, and we could say that here, somewhere along here it got bullish. And as it goes up, eventually that trend will fail. It will break some sort of a swing point low. And when it does it, right, the trend has ended. MTTF, because we know big N in the equation of the population of all stocks, sectors, and general indexes, we know the population, we know what the trend is for all instances for however much time that we care to study it. We can, with some certainty, we can compute what the probabilities are that the trend will end. And that's what the MTTF number is all about. It gives you a measure of how extended something is based on time of trend. And that's something you won't find anywhere else. The timing part of it really has to do with two concepts: support and resistance zones, and then also retrace and regenerate zones. And I'm going to go into those quite a bit here. So let's pop over to the site. Let's bring up some of these ideas and show you how they work. So if we go to the tools, you have all the tools listed here. We're going to start with the most simple thing, which is just a single chart. And so if I go to Neo TA charts and I put in a symbol, and I'll just pick one, here we go, ABB LTD, and I've got it on a daily time frame, and then it pops up and I can look at it. So I haven't looked at this yet, so we'll analyze it together. So the first thing I want to do is I want to know what the trends are. So if I click here, that's a wild a link there on the time frame. That will pop up your trading cube, and you can see what the trends are on all the time frames if you're looking at just one of them. So I can see this is sideways, bullish, and bullish. The sideways is already very extended. The bullish is young. It's only 7% extended. That's the cumulative mean time to failure. And on the long term, it's also fairly young as well. And if I look at the sector, now the sector is starting to get extended at 71%. That means that I'm going to have the sector pulling against this stock if this stock's trying to go up. And so this needs to reset, and we'll take a look at that sector here in a minute and see what it looks like. When you're analyzing whether you want to get into something or not, you really want to analyze the instrument itself in the context of the sector and the general market. And so the market somewhat extended 70, the sector somewhat extended at 70, young in their intermediate term weekly charts, and to some degree extended in one case, but not too extended in the other two cases on their monthly charts. And so we've got a situation here, what it looks like to me just looking at the cube and not even looking at a chart. It looks to me like we've got a situation where they're more than likely these stocks in this sector and in this market are going to have a hard time continuing to rise in the near term because these want to reset at some point here fairly soon probably. And so what I want to do if I want to be long a stock like ABBN is I want to find an opportune time to get into it, not just from the stock perspective, but from the instruments sector and its general market. And that will come when those reset. So let's pull this out of the way. Let's go back and just look at this stock, and then we'll pop over to each time frame, and then we'll go look at those other instruments, the sector and the general market. So what do we have here? We have a general trend that was up. And so let me mark this up as we go. So the general trend here, transition to bullish, that's the green arrow. Green says it's confirmed bullish. That means that it had more volume on this breakout than it did, and that breakout would have been down here somewhere, has more volume on that breakout than it did on whatever the bar was that it broke over here, which was a swing point high. And since it's off the side of the chart, we can't see it here. Now, you actually can see it, and I'll show you how to do that. You can go to the trading cube, and I'm going to right-click and open a new tab so that I can see the cube. And I'm going to put the ABB in to the trading cube. So let me clean this up, put the ABB in there so that we can see what that looks like. And here are the prior stock trends that have transitioned. If we look at the short-term time frame, we can see that that transition, which took place, this one back here took place on 1, 2, 3. Well, it's actually taken place too far back because we only do 3 of them. So it would be from here over that we can see them. So let's pick this one. That was on January the 11th. If we go back over here on January 11th, we can see the details of what broke, when, how, and where. And so that's how you can go find out the details if you care to dig that deep. What's really important to me when I look at that chart where I see a bullish breakout is that when this is broken and we get over that, right, when we come back, what we're focused on is the retest regenerate. And so this breakout of this particular bar took place right, let me pull this down, took place right here on that red arrow that you see, and I'll draw an arrow to it. That arrow there, this got over, it closed over this high. When it does that, it breaks out. Now the very next bar tests back into this bar. And it's testing the volume on this bar, the volume on the breakout bar, and the volume of the bar that's doing the test, which is this bar. And what do we notice here? This has the greatest volume compared to that one, so this is the one we're going to use. And how do we test it? We test it with very light volume. The sellers walk away as price comes back. They're not willing to sell. What does that do? That flips it around and takes it up to a new high. And so the market's giving you an indication if you're willing to listen. The market right here is giving you an indication that this is going to try and trade higher based on that particular bar. And the reason for it is you come back, you don't have as much volume. Sellers are telling you, I'm not willing to sell. If you're not willing to sell, then you're probably going to go the other way, and that's eventually what takes place. And you roll up there, and then you come back again. Now look what happens. Volume expands. Now do your comparisons, and I'll clean this up and we'll do it again so that we can see just this. We'll ignore the first one. Now realize this is our second test. We had a test back here. This is our second test over here. So we're testing the second time back. When you test multiple times, there's probabilities associated with that. Those probabilities decrease for you being able to actually go up again. In other words, the probabilities increase for you to actually fail and go lower. And so this is the second test. When you get out to the third test, the probabilities are against you. They're with you on the first one in all cases. They're still with you on the second one, but it's almost a toss-up. When you get to the third one, they're against you. And that's where this particular stock is right now. It's on the third one. So going back to the second test though, volume expands. So again, we're going to take the volume, the highest volume between these two things, which was the breakout bar and the bar that was broken. Volume was higher. We looked to see if the test was on more volume or not. It was. But it held. In other words, it did not break down below the low. When it does that, it's going to try to bounce again. And that's what it did. In other words, it could have tried to test again. It didn't. And so as it started to bounce, you have to expect it's going to try to bounce again. It did. Here's your third test. Here's the fourth test. The writing on the wall for this stock is it's probably going to break lower. And so I'm sure you will be reviewing this video long after I've made it. If you want, you can go back and you can see, I think your probabilities are getting fairly high now that you're going to see a bar here pretty soon down in this area, and it's going to break this swing point low, break that swing point low, and head down here to test these others. That's the way this particular chart is set up on this time frame. Now if we move to the weekly time frame and see what it looks like, and remember that was sideways time, that was sideways and it's extended. It's going to break one way or the other, so that one looks to break. Now on the weekly, here's your swing point high. Your retest regen is up here, and so what one should be watching is how it tests that area, and that's what it's testing into now, and looking at how the volume is as it comes back. And in this case, the volume's heavier again, which also suggests that you're going to try to break it down. And finally, if we look over at the monthly chart, and so we can sit here and go through them one by one, or we could pop them all up at once and walk through them. If we look at it, the monthly chart didn't get to the highs. The swing point highs that it broke are back here. Looks like pretty good support in there. This kind of suggests that what's going to happen is on those other time frames is that more than likely you're going to come back into this area on those time frames. And if we look at the bottom of this, it's about right there, which is what, 2090. If we go back to, like, say, the weekly and look at where 2090 is, you're going to find that it's probably below, yeah, see 2190 is down here. It's below that area, which says this thing's going to consolidate. And it may be a good trade a little bit farther down the line, but right now, this is not a stock I would be trying to buy. It's not set up. The timing is not there. The probabilities, if you're buying it, the probabilities are against you. In fact, if you were doing anything, you would be shorting this stock. But then that gets into your risk reward as well as your probability. There's always those two things you're focused on when you're asking yourself, do I buy or sell something? What's my probability of success? Right? What is that? And in this case, if we're shorting, the probability of success is not too bad. It's certainly better than if I'm doing a long. The probability of success is not good at all on the long side, especially on the daily time frame. And so when I look at it from that perspective, that's not good. Now, what's my reward to my risk? That's the second question. So if I did anything with this, I would be shorting it. If I'm going to short it, what's my risk? My risk is back probably up in here, and my reward is maybe that, what did we say, about $2,100, I think, or $21, so right in here. And we're sitting right in there. So as you can see, it's about a 1-to-1 ratio of reward to risk. Not a good scenario. So I don't see a trade on this at this particular time when I'm marking this chart up. So the concepts of trends and timing are important, right? They're the basic components, the most important components of the model. And so when you find your trends, you can do that with your MTTF. You just click on it and you get it, and then you can take a look at it and see what they are. Once you have that, right, then you can start to understand what your scenarios are in terms of trend, and then you start looking at these timing things like breakouts, like retraces, like retest regenerates, so forth and so on. Each tool, and I can't teach you everything in a video, but each tool is highlighted here with help links for each one. So you can pop into them, you can go over the charts, for example, and you can see an explanation of what these charts are, how they're marked up, and so forth. And so all that's available to you. Let's go back one more time, though, just to finish up the idea of how could we potentially trade or not trade this particular scenario, this stock. And I'm going to go back to just pull back over here to the stock itself, and I'm going to pop up the trading cube. Actually, let me go here to the trading cube, because if I'm on the trading cube, I can actually click on this and get this particular index. So if I click on it and then click once more to blow it up, and I guess I'll have to redraw this to blow it up for some reason. There we go. If I look at this particular stock, and in this case it's the industry, it's the industrial sector, I can come over here now just like we did on the stock, and I can do that same analysis we just did. And remember, this was 70%. If we click here, this was 70%, 71 on its MTTF. So in other words, it's been going up a very long time. It's extended. It wants to reset. So let's talk about how it resets real quick as a review. You got to break a swing point low to reset. Where's that swing point low, and how far is it from where we're at now? What's that percentage, right? That gives me some idea of how much risk there is. Now this, because it's a big gap up off a swing point high, this looks like that definitely will get bought if you get that far down. So you could use that as kind of like a worst case scenario on this initial pullback. Where's the best case scenario? Right here where your green is showing up. You know, in other words, you come into here, you find buyers, maybe you bounce a little bit, and then maybe you roll over again and you come down and try to break that swing point low. That's the sort of thing that can happen. The other thing that you're looking at, and this low, let's get the actual numbers. This low is 140681, and this one is 13, so it's already under it. Had this not got under this, and you go 6 bars, then this would actualize as a swing point low, and all you'd have to do is break this one, not the one down here lower. But as it currently stands, you're going to have to break the one lower, not the higher one at this point in time on the daily time frame, which is where that MTTF actually needs to reset. And we could do the same thing if we wanted to on the SPIX. We could go over, we could click on it, we could get the same sort of thing. We could do our analysis on it. How far does it need to come back? There's a swing point low right here. That would be inside this bullish retest regenerate zone, and that would come, that would be the second test, so your probabilities would still be pretty good there. And so as it comes back into this area, that's probably a good place to think about getting both a reset and making a purchase. And so that's the way, when I look at charts and the way you use the neoclassical concepts in conjunction with the charting tool. The great thing about the charting tool is that it gives you those visuals that you need. Where are my swing point highs? Where are my anchor bars? My anchor bars are going to be in blue. I can see this one is an anchor bar. I can see you know, this one here is an anchor bar, and I can just pick them out. There's another one there. As those anchor bars are combined, right, that's where we get our zones of support, and if we had one, a zone of resistance up above. That's the tools, the charts, and how the charts fit in. Now, the charts are not the only thing on the site, and I'm going to pop back to the site here. You know, the charts, the watch list, they fit together real good, but you've also got other things that are available, like the trading cube we just talked about. And on the trading cube, you know, you get a lot more information. And let me get the stock back in here. You can click on this and select it actually and get it that way. You get the trading cube itself, but you get this other information, the support zones. You can actually see the actual prices of them. You can see their rankings, how important they are or how important they're not. And so when you see the rankings of them, that tells you, you know, how serious is that resistance. 1 is the highest number, 0 is the lowest. And so the more resistance you, the stronger that band is, right, the higher the number is going to be. You can see what sector it's in, the general market's in. If we have the information, then all the information associated with the stock will be listed here as well. And so that's the trading cube. Market view, trading signals. Let's come back to that one. And let's go to, let's just take trading signals first. Now, trading signals and stock monitor are very closely related. Trading signals was based on the third book, and in case you haven't read the books and want to, you can click on a link here and get to them. But this third book, Trend Trading Setups, introduced the idea, in other words, the second book was Trend Qualification and Trading. And in that book we said, here's the model, here's how it works. And it works pretty darn good. It covers most of what you see, and it does it pretty accurately. This book said, okay, now that we know that, how can we find the best trades? And one of the things that we did here was we used those two concepts of breakout and retrace and the timing associated with them through price, volume, and time. And we said, you know, we can make up some rules that actually work pretty well to identify which stocks have the best possibility of continuance if they break out, have the best probability of buying or selling them if they're retracing. And you can find all those criteria, and I'll just click on this one. You can find all those criteria over here in the help. And so a bearish breakout, these are the signals that have to trigger, and 80% of them have to trigger. And that's important. 80% of these things you see here have to happen for this signal to to occur. And so if you don't get that 80% number, you won't see this signal. If you do, you will. So what does that say? It says all those things that are important are aligned. They're in congruence. They're all pointing the way you want them to. That says I ought to take a better, a harder look at this particular instrument as a result of it. So if I look at SIK and let's go back here and pop into it one more time. When I change screens in this browser, it seems to be affecting whether it shows or not. But anyway, here's a strong trend. Now look at this. Now had we had, and we've got another breakout that's taking place now that tells us this is still very strong. You've got it taking place here. You've got strength over here in your weekly, and you have strength in your monthly as well. Come back to this. Let me show you something else. See these these swing point highs that are kind of congruent together? When this broke out here, right, that was a signal of some serious strength. Let's see what that price point was. December, not December is not what I want. I want the price point 4953. Yeah, no, I want the high. I'm sorry. Let me do it one more time. 4990. If I come over here, December 4990, it's going to be this bar. And so this particular bar is the breakout that you see on the daily on those two swing point highs. That's the same breakout that you see here. And had you seen those two together and picked up on them, you would have known that there was a good probability of continuance for 2 to 3 bars. The trading signals brings your eyeballs to those stocks that have the probability for a larger move to the top side or to the bottom side. This one gave that signal on that multiple swing point breakout, and I'm sure back then that signal did appear just as it's appearing now with the breakout that we see here on the daily chart, right? This breakout that we're seeing now. And so that's signaling, right, is a great tool that every day will scan all the stocks in the database and will give you whatever signals it sees that meets those criterion that we just talked about or that we just kind of looked at. You can also use this tool. Let's say that we find 2 or 3 stocks, and I'll just take these two that we're impressed with, and we want to keep track of them. Maybe we're not going to buy them immediately, or maybe we're going to buy them very soon. We just might want to be focused on them. We can pick a watch list, and I'll just pick the demo watch list. And if I take these 2 stocks and I highlight them, I check them, I select the watch list I want to put them into, and then I go over here and I add them to that watch list. Those symbols get added to that watch list, and if I go to the watch list, and let's just use this window and do that. If I go to the watch list and I pull up the demo account now and select it, and once it redraws, we're going to see those 2 stocks being placed into this watch list. We can put notes here about what we see and keep track of any kind of notes that we want. If we want to get rid of them, we can remove them and so forth. Very fast, efficient ways to move stocks from the tools to your watch list, the glue that holds the tools together. And it's a very powerful mechanism that's built into these tools to allow you to both navigate but also manage what you're looking at. Going back to these 2 tools, now trading signals I've kind of explained. If I go into Stock Monitor now does exactly the same things as trading signals with one significant difference. You remember how we just said over here, if I go to that, the bearish breakout, and I check the help button on it, and I come here and I say, okay, these criteria I have to meet. Stock Monitor does exactly the same thing, except for it says I don't need to do 80%. If I see a bearish breakout that takes place, I don't care about the rest of these things. I'm going to signal it. I'm going to let you know. If I see a potential bearish breakout that's about to take place, I don't care about the 80%. I'm just going to tell you it's taking place. I'm going to issue a signal on it in Stock Monitor. Same thing on breakouts, potential ones, and same thing on breakouts and retraces, both potential and actual, on the bullish side. Now, how would you use that? Well, let's think about it. Let's say that I have a watch list that I've built. And if I go to my watch list and I choose one of the ones I'm interested in, maybe I'm watching consumer durables, and I've put all the top stocks of consumer durables in here. What if I'm in this stock watch list, which I am right now, and I go over to Stock Monitor? What Stock Monitor is going to do is it's going to say, in that watch list, durables, are there any stocks that meet the two types of trades that we're interested? Either bearish retraces, bullish breakouts, bearish breakouts, or retrace potential, all of those. If they do, signal them independent of whether or not there is a 80% rule. What this does is it allows you to essentially let this tool serve as your alarming mechanism instead of putting price points and removing price points and managing alarms with your brokerage tools. And so it gives you a live, play-by-play, if you will, on any of the two types of trades that could take place or have taken place, and it alerts you to them on a daily basis. That's what Stock Monitor does. Now, sector trends, a little bit different. The next two here that we're looking at are really kind of things that you can use to find other things. So if I put, for example, I can drill down, I can go to ABBN.SW, I can click on it, and what it will do is it will pull up that sector. Once it draws, it will pull up that sector that the stock is in. And so in this case, it's in the industrial sector. So there's the industrial sector, what its trends are, and then all the stocks that fit that same sector, that are in that same sector. The nice thing about this is it groups them all, and it basically gives them to you by trend. So if I'm focused on, say, the long-term trend, I could click on that and sort them by long-term trend. And then if I'm really interested in these stocks and I want to know what they look like, I can click on those stocks individually, one by one, and I can take and pull up those stocks and see what their charts look like. And let me pull that back up. I lost it. I'll just go to another one. There's the chart. I can see what it looks like. I can go to the next one. I can see what it looks like. I can manage them all. I can put them where I want on my screens, resize these to whatever size I want, have them appear on my screen wherever I want them, and I can flip through them real quickly. Now, the nice thing about this is, just like we saw before, you can click the ones you care about. You can go and select the watch list that you care about to put them in, and then click on the add to the watch list. And so if I wanted to put those into my demo account, I could add those to that demo account, and now they will appear over there, and I can manage them. You can have basically an unlimited number of watch lists. You can manage them in any way that you want to. That's the sector trends. Trading Cube Scanner, also same sort of tool. Scanning everything based on trend, of course, qualified trend. And so you can actually save various configurations that you care about, like a young bull configuration. And what that configuration does is it sets up these trends in different ways using trend and the mean time to failure preset for you, and then gives you all the stocks that meet those criterion. So in this case, there's 4 stocks, 3 of them in the financials, 1 in the industrial sector, that meet the ideal of being a young bullish stock. Very powerful tool based on trend and mean time to failure. That's pretty much the tools, and that's how you can use those tools. Now there are a little bit more in terms of tools. In particular, there's the weekly trend in signal changes, the actual trends, and that's basically, you can find this elsewhere, but I'll just click on it here. It's an easy way to just quickly see an overview of the trend for the sectors and for the indexes. The thing I wanted to bring your attention to here was the weekly trend and signal changes. This is a very powerful tool. It tracks historically trend across SPIX, and it has all of those stocks in terms of how those stocks are set up. Are they bullish? Are they sideways? Are they bearish? Here's a graphical representation of them. And on each of the time frames, and this is the intermediate term time frame here, and what they were last week compared to this week. And you can see what the MTTF is up here. A very powerful one-stop shop for trend transitions on a weekly basis, an intermediate term time frame. Gives you all the transitions that took place, whether they went worse or better, and then all the signals that took place, how many there were, so that you can get a feel for how many signals are being fired on that week. Again, a very powerful weekly trend report. Gives you a lot of data, and just like everywhere else, we make it easy. You click on this, you can pop in and see what that stock looks like, and then you can also pop in and of course change it to any time frame that you're interested in viewing it, and examine those stocks based on that idea. So very powerful tools available to you. And let's go back to this. So it's a very powerful set of tools available to you in the Neoclassical tool set, and gives you a leg up on the competition in terms of just having at your fingertips a lot of information and an easy way to manage and assess all that information. Now, since it's taken a good bit of the time here, we're approaching about 50 minutes into this video, what I'm going to do is make one more video, and I'm going to take that video and drill down and show you how I make picks in the Swiss markets, how I create a portfolio of long and short picks, a pick list if you will, that gives you a good insight into an effective way to use these tools that I just highlighted for you. We'll do that in the next video, and then we'll wrap up that video with kind of a summary of what we have and what is available to you, and why you really should think about contacting us at NeoTA.